The fact that we can today synthesize it is basically responsible for the fact that we can support and grow food for half of the population today. So it's not enough that we have a Tesla. It's about changing the entire market. That's the challenge. I believe that the way we do things today, the way we grow things, the way we ship things, the way we create energy, the way we make food, all of that is going to change.
Hi, yeah, thank you so much for joining me today. I really appreciate it.
Thanks a lot, Jack. Thanks for having me. It's a pleasure to be here.
So, this is a really exciting conversation for me because, as I mentioned to you at the start before we hit record here, when you Google first of a kind financing, your name pops up. So, I very much am excited to pick your brain all about the topic of first of a kind financing because it's such a prominent theme within the world of climate tech at the minute, isn't it?
Totally. And it's surprising how things turned out. I guess this happened because we were very early to understand that this is a huge topic. And ahead of the curve, we started talking about it and publishing a lot of material around it. And that's how things evolved.
So, for those unaware of your work and all of your thought leadership, would you mind maybe just giving a little bit of introduction to yourself and the fantastic team at Extantia?
Sure. So maybe a little bit about background about myself. I'm electrical engineer by trade, but maybe a storyteller by heart. So everything I'm doing in the VC space is about telling stories. About understanding technologies and because I'm an engineer, understanding that technology is not the most important part or just part of the story, and then simplifying it and understanding how do we sell that and how do we scale those, and then you understand it's not always about the pure technology because anyone can do something in the lab, but scaling it, it's commercializing it, it's something different. So this is maybe gives you some kind of color about myself and what am I focusing on and doing. As a group, Extantia is a venture firm, and we're investing early stage in technologies that can move the needle on climate change. That means that we've done a paradigm shift, and we're not first looking at it from a venture perspective and then coloring green ex ante, but rather ex ante, we look at things and say, hey, can they really move the needle? That's the first gate that things need to pass. And then we say, okay, if it is really can be big on climate, is it a VC case? So we don't sacrifice any of the VC returns, and maybe we can talk about that later, because we do climate. In fact, we believe that this actually can be a $1 trillion opportunity market. We look, so that's from the industry perspective, right? From geography perspective, we're pan-European fund, so predominantly we look at the European market, but occasionally we'll do something in the States. As said, early stage tickets from 1 to 5 million. So basically seed series A, that's our sweet spot. And we can also talk about what is seed series A in climate. That's also not something that is clear from itself. Yeah, that's I think in many cases, and I think to alluding to your point, in climate, we're writing the playbook of what it is to start a climate tech companies, what it is to be a climate tech investor, what it is to be a climate tech founder. And we're all learning here.
Massively. And it's such an evolving landscape at the minute, and so many exciting innovations coming out with really quite diverse capabilities. You've got your green ammonia, your sort of accelerants for getting new infrastructure into the ground. It just varies massively. I'd love to get your perspective as an investor. What does this sort of the gold standard look like for a good company within the climate tech space?
Let's start with the end result, right? This is not necessarily about what is a good company. Let's talk about the good solution, right? At the end of the day, and that's the story about climate. It's a complicated, it's a fragmented topic, right? But in itself, it's simple, right? Everything that is being done today from dinosaur bones needs to be replaced with something that is sustainable. So the challenge is very simple, right? I mean, high emitting carbon solutions, we need to replace them with low emitting carbon solutions. So the challenge is very simple, right? This is not, we don't need to invent something that we never knew of, right? It's not about coming up with a app or something or AI that nobody imagined before. So in itself, it's very straightforward. We can go out and we can map all the challenges, and people have done that, and we know all the challenges that we have, and we just need to replace it. So in itself, it's simple. The challenge is, and that's where things become complicated, is one, it's fragmented. There is no one panacea, right? There is nothing one that we say, hey, if you just solve this, let's solve agriculture and then we're done. No, that's 20% of the problem. Hey, let's solve mobility. That's only 20% of the problem, right? And if we don't solve all of them, we're not going to make it. Not going to make it in terms of keeping degrees to 1.5, 2 degrees warming. Yeah. So this is the biggest challenge. Now, the second element of the challenge is scale. And that's the scale and the cost, right? So if we look at the things, the sheer size of the stuff that we need to change, right? If we're talking mobility, think about the amount of cars, millions, hundreds of millions of cars that need to change to EVs. So it's not enough that we have a Tesla or we have any other brand that is coming up with an electric vehicle. Yeah. So it's not about coming up with a technology that is a replacement. Yeah. It's about changing the entire market, right? That's the challenge. And then the next level of challenge with that is, as I said, cost. It's not about us coming up with a car, with electric vehicle car that is more expensive than a combustion engine car, because nobody's gonna buy it. Yeah, maybe the hipsters in Soho or in Berlin Mitte, yeah, we can afford that. We're also early adopters and etc. But we're very privileged to be able. But at the end of the day, you need to have a solution for the entire world, and the entire world is not gonna pay a premium for going green. It has to be cost competitive. What is good? Good is something that can be scaled and be cost competitive. And that is what we're looking for.
And how do you think we are currently doing against those two metrics that you just described?
You can look at hydrogen and say, we're not there. You can look at direct air capture, we're not there. Sustainable aviation fuel, we're not there. Yeah. So this is very gloomy perspective. But then let's have a look at what we've done over the past 30 years or past 10 years and have a look at solar PV, where we were price-wise 10 years ago or 20 years ago and where we're today. Today, solar PV is not only it's competitive, it's actually the cheapest source of energy. So this is not anymore a discussion, solar is greener than coal. Yeah, this is a discussion about solar is just way cheaper. And then you see that the market dynamics start to change, because at the end of the day, this is all a matter of capital and capital shifting. And this cannot happen if you're not cost competitive. So you can look at things and say, or lithium ion batteries, right? Where they were in the 90s and where they are today. If you look at just from the perspective of today, it might look like, oh, we're not there yet. But if you recognize what we've achieved in the past 30 years, even before we called it climate tech, then suddenly you see there is a lot of achievement that has been done, and we will do that. We will manage to get the cost down.
I want to talk about that point of a timeline that you just described and the increasing sense of urgency for us to act and to really make meaningful progress with this. Because if you go back in time where we maybe first saw solar PV come to market, we had time. We had a bit of time. We had a little bit more wiggle room when it came to R&D and getting the business models correct. Whereas fast forward to today, we've got circa 6 years on the climate clock. the time to act is now, or it was yesterday, but all we have is now. Something that you've spoken about previously is the time value of carbon. I'd love to just get a little bit of an overview of that, because I think it's a really important topic to where we find ourselves today, particularly in terms of trying to unlock meaningful change at scale.
Right. When we started looking at these, it was clear that there are all kinds of ramping up functions, right? You can have a step function, you can have a exponential function, it can be a linear function and a different time scale. And it might be that there is a technology that is going to take way longer to scale, but the impact, the overall impact is going to be tremendous. Yeah. In this regard, I would name fusion, for example. It's a classic one that everybody is working on, and the optimistic camp says that in 10 years' time, you would start seeing that scaling. Yeah, I'm more in the camp that it's 30 years from now. But definitely, this is something that is going to, when it's going to happen, it's going to have a lot of impact. But time-wise, it's definitely not in the next 5 years, right? So talking about the stuff that we need to do in the next 5 years, that's not there. Now, generally, so that's by way of an example, but generally, everyone, and we were talking about capital, everyone that is in this business knows what DCF is. And the notion that capital has value. And if you get $1 today or you get it in 10 years, that's not the same value. And the same goes for carbon, either by removing a ton or abating a ton today or in 10 years' time. Now, of course, the cost may be cheaper in 10 years' time because of technological improvements, but the fact that the ton is still out there for the next 10 years means that it exacerbates the problem. It means that we're going to have second ripple effects, secondary effects on coral reefs, for example. Yeah, so people can say, oh, let's go to 2 degrees and then fix it. And maybe that's going to be the case, but what would be harmed is going to be very costly to be fixed. So it's going to be cheaper, and that's the point. It's cheaper at in the grand scheme of things. It's cheaper to take action now rather than to wait and fix the problems later. And that is basically what we were saying, that if any technology, any act that you can do today is way better than doing it tomorrow. It also, from a VC, and this is maybe from doing good perspective, but also from a VC perspective, this has implications also on our investment thesis, right? A company that is going to start scaling and making impact in 10 years' time is beyond the lifetime of our fund. A company that is going to have impact now is because it's commercializing now and it's creating revenue now and is relevant from our return perspective. So these things are aligned.
It's a really interesting point when you spoke about the fund timeline, with typical VC funds on a 10-year investment cycle, maybe typically investing for those first 5 and then supporting those investments and maybe sort of further reinvestment in those sort of second 5-year period. I'd love to ask you about a quote, which I've quoted a few times here and there on previous podcast episodes, and we see banded about quite a lot. It's a quote from McKinsey, which is 78% of the solutions we need to solve climate change already exist, which is quite a powerful statement. As an investor, investing early stage into new ideas within the climate tech space, I'd love to get your perspective on this. If the quote from McKinsey suggests that actually the majority of the answer to our big planetary challenge isn't new R&D, it's not new innovation, it's other aspects such as business model, economics, and scaling. What's your take on that?
One, I'd be very glad to have a look at the calculation that McKinsey brought, that it is 78 and not 78.5 or 79 or 80. Yeah,
very round numbers.
My high school math teacher was calling me to the board and asking me to solve equations. And whenever I solved one, he was telling me, your solution has a very interesting characteristic. It's wrong. So this feels, whenever we do all our carbon math and all these calculations, I keep saying we're always wrong. Yeah. But it gives you a ballpark calculation kind of. Yeah. So 78 sounds like, I don't know. But anyway, to the point, this is, I think that it's very hard to quantify. I think that 50-50 sounds to me like a little bit more, and this is what, or 60-40, this is what you hear from the International Energy Association agency. This is something that you hear more. This kind of gut feeling, this fits more where we stand. But at the end of the day, this is not bait, whether this is this or that. We need both. Yes, do we need to deploy more of what we have? For sure. Can we survive only with the solar and wind? No, because these are intermittent. Germany doubled its capacity over the past 20 years of what it has in wind and solar. And guess what? Emissions went up. How come? Because we had to compensate base load with coal, because we don't have long duration energy storage. So yes, maybe we are missing still 22% of the equation, but that 22% is quite crucial. Yeah, and same goes for hydrogen. Hydrogen is nowhere near in where we need to be in terms of price point and in terms of scale, etc. And so what I'm saying is that we still have some crucial elements that, regardless where they are on the percentage point, without having those, we will not be able to solve the entire scale up. Do we need more EVs? Yes, we do. But do we have the infrastructure? We don't have the infrastructure. Do we have the grid to support it? No, we don't have the grid to support that. Yeah. So there are a lot of issues that are still standing ahead of us that are not solved, that even if we're to do everything today that is there, we'll get to the targets maybe of 2030, but to net zero by 2050, we're still not there. That's how I read these types of numbers.
I agree with you. I agree with you completely. And I think ultimately, at its most simplest level, solving climate change is the greatest team sport that we have as a planet. And it requires everyone and everything to come together to chip in and bring their capabilities and skills to the table, because it needs everything, a really diverse set of competencies. I do want to just pick your brain about some of the fascinating challenges that your fund has paid quite a lot of focus to recently. First to mind is the green ammonia. Green ammonia is a fascinating challenge, and I think one that maybe, I can't imagine the topic of ammonia is on most people's minds on a day-to-day basis, but I know that this is something that it has been a big focus area for your fund. What is the challenge when it comes to ammonia, and how are we thinking about the solution to this?
When most people think about the biggest inventions of the 20th century, people will say internet or travel to the moon, or so things like that. But actually, one of those big ones that is not often being mentioned is the fact that we can do synthetic fertilizers. And ammonia and nitrogen as fertilizers, and the fact that we can today synthesize it is basically responsible for the fact that we can support and grow food for half of the population today. So if we weren't having synthetic fertilizers, we would have been able, with food production, been able to support only half of the Earth population. And we wouldn't have seen that kind of a growth and GDP growth, etc. So ammonia as a fertilizer, is gigantic. Now, ammonia comes with a cost, because basically NH3 is nothing but, or the way you produce it, it's nitrogen, hydrogen, and the hydrogen production today is, the way you produce it emits a lot of emissions. Without going into the technical, but steam methane reform, basically you take the gas, that has CH4. You, with a lot of steam and heat, you take and create the hydrogen, then the hydrogen goes with the nitrogen that comes from the air. That's a process that is emitting a lot of energy and consuming a lot of energy and emitting a lot of CO2. So this is one topic. The other topic about ammonia, and that's why we're talking about, hey, we need green ammonia. Yeah? So one, because of the fertilizer element. Second is because ammonia can be, today we're a carbon-based economy, right? So when we're driving, when we're combusting something, we're combusting hydrocarbons. But we can also combust nitrogen. Yeah. So we can also have ammonia-based engines. And when we're talking about, especially in the shipping industry, that's where ammonia can be the fuel, the low carbon fuel of the future. So ammonia also can be a fuel. And the last thing about ammonia, it can also be an energy carrier. So when we're talking about hydrogen economy, again, if we're not taking our H and C from dinosaur bones, where do we take the H from? And if we're doing green hydrogen, and for that we need cheap electricity, then probably not in Germany. Then you go to elsewhere, and then you start the need to ship that type of hydrogen. And one way to do that is turning that in, because hydrogen shipment is not, it's the smallest molecules. And because it's small, it has the tendency that evaporates and escapes. So it's not really easy to ship hydrogen. Liquefaction is also not so easy as with nitrogen. And therefore, so LNG, and therefore and we have other investments in the space to try to solve the liquefaction of hydrogen. But one way to solve it is not to ship it as hydrogen, but rather as ammonia. And that's why ammonia as a topic is actually a huge one. And being able to generate ammonia in a green way, low carbon way, that is way beyond just the 1.5 to 3% of emissions that today's ammonia is responsible for.
Wow. I don't think anyone would have expected the critical importance it is to actually tackle this prominent challenge. It's amazing to hear. I'd love to get your perspective on the financing side of things. And I started off this conversation with that first of a kind reference. There'll be loads of folks listening who maybe aren't familiar with the concept of first of a kind financing. Would you mind just giving us a little bit of an introduction and breaking down what we mean by this terminology, please?
Sure. So this is something that also we learned on the go and understood that where is the journey? Yeah. And usually VCs, we're coming from maybe software investments or a little bit deep tech and gadgets and iPhone and all these things that are nice, but they are not infrastructure. They are not coming at a huge, massive investments, CapEx investments, and scale, and then that are usually in the realm of infrastructure. And here we are, the VC industry, we are playing now at the early stage. And all of a sudden we realize, again, if we want to solve the problem climate, it's a question of infrastructure. It's a question of scale. Now, naturally, you cannot collab with a product and say, okay, so now I have this product, I've now generated, let's say, 1 kilogram a day. Now I'm ready to start a facility that is going to do 10,000 a ton a day. And for that, I need 500 million. It's just not going to fly. Yeah, no one will give you that type of capital. There have to be multiple steps in between that you have to slowly scale and de-risk the technology. The same goes for solar panels. Again, going backwards and looking, or if we look on wind farms, the industry didn't start with building wind farms that are now, I don't know what's the latest, 15 megawatt per wind farm, right? So we started in kilowatt because these things have to be risked. There's massive capital here, and the massive capital that is going in that direction is has a different risk profile. This is not equity money. This is not risk. This is not VC money. This is infrastructure money. And infrastructure money is expected is low risk and wants 3% return and no technology risk. Yeah. So you cannot build the first facility with a huge capacity, 500 million, with you just went out of the lab.
They call it a valley of death, right? There's a valley of death between some early seed stage funding that maybe through friends and family and other early stage support mechanisms, and then this massive big growth, what we would call growth rounds for massive big infrastructure projects. So there's this valley of death concept, which is what it's often referred to as. So I know you spend a lot of your time thinking about this challenge. What's the solution? I'm sure there's no easy answer, but what is the strategy for, say, early stage innovators and entrepreneurs to try and overcome this so-called valley of death?
I think the first step, and this is, I think that 2023 is really in climate tech, maybe I would vote for folk as the word of 2023, the word of the year, because I think the first step really was to put that as, to talk about the knowledge and understanding of the challenge. And especially not just with investors, but especially with founders, because there is not one solution, but the first thing is to understand and cater to that and plan for that and think about that. So about the steps, about the financing, how am I going to do that? What are the sources of the capital? What do I need in order to do that? What do the investors need in order to invest, right? So I think the first step is to understand that there is a topic and start to break it down so that people are preparing. And I feel like a lot of the stuff, when today I'm negotiating, talking to founders, and we're talking about the term sheet, and so everybody already know exactly which liquidation preference and which anti-dilution. And if I think about when I started in VC, which is over a decade ago, when we were talking to founders back then, they had no idea about term sheets and things like that. And there were a lot of books coming out, so demystifying and the term sheet and one-on-one, speak like your VC, and books like that. And I think that a lot of the stuff is education. And I think we're doing a lot of that now in climate tech, talking about things and sharing knowledge and best practices between founders and investors. How should we do things? So this is really the first step to solve the problem.
And just from my own experience, I've seen a huge amount of people coming from other sectors getting attracted to climate tech, folks that are hugely passionate, but might not necessarily understand the real ins and outs that make climate tech potentially quite complex to new entrants. So the first step is knowledge. So it's understanding the ins and outs of the market, maybe what makes for a good investment for a more of an infrastructure fund. What happens beyond that point?
One thing I learned, for example, when I'm saying that something is de-risked, the infrastructure investors say, hell no, this is not what I call de-risk. We need to talk to each other and exchange. And as founders, I call everybody and say, guys, you have to talk to everybody. You have to build the relationships early on and understand that this is not, especially if you are coming from the digital world and you're a serial entrepreneur and now you want to do something in climate. We see that a lot and it's very good. You need to understand that this journey is not similar to your previous one, right? And then start talking to everybody, and that's the second step. Start implementing and understanding that this is not an equity story or not an equity alone story like we see in the digital space, especially AI and or blockchain, whatever is the favorite topic of the day. It's not an equity story. It's from the get-go, this is a blended financing story. And as much as you build a funnel when you're raising equity, you need to build a funnel for grants, you need to build a funnel for debt, you need to prepare, you need to have the collaterals for each one of them. You may need to hire people that are specialists in each one of them and just prepare for that.
So we touched on step one being that sort of that community, that ecosystem piece, step two being around the investors. What happens beyond that stage?
So basically what's important is to start very early on planning and creating a roadmap. If you wish, software companies have a product roadmap. You have to have a scaling roadmap. You have to know at what point you're going to make how much. And by the way, along those lines, there is another one that you have to know what is the price. Yeah, so you remember everybody's talking about the green premium or a premium. Yeah, sometimes it's better to call it technology premium because green may say that it's always there, but technology premium, it's always go down. So it's kind of scissors, right? I mean, you go higher on the scale, you go down on the price. Yeah, so you have to have these kind of a plan, and along that plan, you need to start preparing kind of commercial, the financing, what you're going to put in, what you're going to get out in terms of the technological. The term that we're using is a techno-economic analysis of the facility at every given stage, and then start thinking about, okay, what is the return of this thing? How can I finance this? Yeah. Can I do it with grants? Can I do it with even offtake agree? Can I do it with a debt? Do I have offtake agreements? Did I secure all the feedstock? All these elements that you need to start actually planning for and executing, and that would bring you a step closer to actually being able to have blended financing.
When you speak about techno-economic feasibility work, it reminds me a lot of the work that you increasingly see a lot of the large engineering firms doing. And I know there'll be engineers at some of those firms listening to this conversation, and maybe it did remind them of some of the work that they're doing at the minute. But if you look at the work that a lot of these sort of large global engineering consultancies do for maybe a large industrial company or other types of large asset owner operators, a lot of the work that they do is working with them to do feasibility work to maybe help transition them to maybe a low carbon source of energy, such as hydrogen, or maybe try and sort of decarbonize their industrial plant. How similar is that work that, say, some of the engineers at these consultancies do to the type of techno-economic work that maybe you just described?
Sure. I think it's very similar. And I think I would urge startups to work also with the service providers, EPC. And yeah, the challenge is, and one of the reasons is that usually when we're talking about, again, going back to software investments, we ask usually the typical successful entrepreneur to usually be two things, right? You have to know the topic. Yeah. So maybe if it's a software AI, so you're probably a coder since you were, I don't know, 7 and you went to Imperial College, etc. Yeah. And then at the same time, you have to be a great business person because you have to sell this stuff. This is two things. I feel like we're asking, and it's already very hard to do these two things. I feel like we're asking our climate tech entrepreneurs to be three things. They have to be these great science people who are just talking about coming out of university. They have to be great business people, but they also have to be great engineers. And we know that science and engineering, they're related, but it's not the same, right? And that's why it's not a single person. And that's why they have to plan for it. That's why they have to either hire or outsource and work with those types of offices that, like you've mentioned, with people that have the knowledge and do day in, day out, nothing but pure engineering. And think about how do you take this science and do something big with it, because a lot of the stuff is nothing that even I as an engineer or as a VC, I don't know, right? I don't do every day something with permits. Yeah, and permits is nothing to do with maybe with filing the right file. Yeah, it's about lobbying, and yeah, and so that's why there are so many elements here that beyond the knowledge of the typical founder, and therefore it's not about them being super founder, but rather being a super recruiter, or yeah, or building an ecosystem around yourself and around the company that can execute.
Yeah. One last question to finish, if I may. What are you most excited about in the future when it comes to the world of solving climate change?
Every time I try to do something to guess what's going to happen in 10 years' time, one thing happened. I was wrong. I cannot say what is the one thing that I'm excited about that is going to happen in 10 years' time, but the one thing that is really, I'm really glad and looking forward to is that I believe that the way we do things today, the way we grow things, the way we ship things, the way we create energy, the way we make food, the way we produce our t-shirts, our perfumes, our flavors, yeah, all of that is going to change. And that is the what I'm so excited about. When I started about climate, that was because I thought, oh, let's do a good thing for for the kids, yeah. And I completely underestimated the gigantic business opportunity, and not just creating jobs, everything, but the sheer fact, and again, going back to scaling, the amount of money that is going to be invested in the infrastructure. Yeah. So what I'm really looking for is, and I'm already driving an electric car, and everything that we do today is based, and I don't think that maybe since in the last 100 years, 500 years, that the people all of a sudden changed how they did things in the past. So the steam engine, right? So, for example, I think within our generation, we will be able to see the next change of how we do things. And this is super exciting.
I couldn't agree more. Thank you so much for your time. I really appreciate it. It's been absolutely fascinating.
Thanks a lot.